Oil prices fell more than 1% today, extending losses as investors brace for more supplies following a compromise between top OPEC producers and as U.S. fuel stocks rose, raising concerns about demand in the world's largest consumer. Brent crude futures for September dropped 1.2% to $73.85 a barrel, while U.S. West Texas Intermediate crude for August was at $72.21 a barrel. That's down 1.3%. Both benchmarks slid more than 2% on Wednesday after reports that Saudi Arabia and the UAE reached a compromise that should pave the way for a deal to supply more crude to a tight oil market and cool soaring prices. While the deal may take some time to get finalized, it seems that the UAE will be allowed to produce more output next year. Well, what are the possible impacts of this deal? And Damilola Akimbami, the head of research at Financial Derivatives, speaks to this and other burning economic issues on our commodities market update. Hello, Damilola. Welcome again.
Good morning.
Time this week.
Thank you for having me.
So finally, the agreement, a compromise that we were looking forward to has come.
Yes, it has.
And the UAE may be allowed to supply more. Do we have a figure to this, increase? Do we know how the quantity and what are the likely impacts?
Oh, well, right now, the UAE is going to be allowed to increase, or they're going to increase UAE's quota, OPEC quota. So it's going to be producing about 3.6 million barrels from about 3.2, which was where the level it was producing at before. So it's not finalized completely yet because the whole group, that's OPEC Plus, they have to meet and they have to get everyone's buy-in. And also he has raised the possibility of other countries also asking for their quota to be increased. But definitely when this announcement was released yesterday, we saw oil prices trading in a choppy movement. And this morning so far, Brent has lost over 1% and is trading around $73 per barrel. And this is, it comes as no surprise because we know that when supply increases, price would fall. And there are other factors that are spurring this movement in oil prices. We know that also the UAE's fuel stockpile to increase. So that means the demand for oil in US, and US is the largest oil consumer, that demand is trickling down. We know that the Delta variant is spreading. It's now in Indonesia, in parts of Europe, in India. So we also have that happening right now in the global oil market. So all these factors are in support of oil prices falling, but then demand is still there, and there are some investors that are optimistic that the level of global demand may be strong enough to offset these factors.
Even if they, come to an agreement and all of that. But do you see this the trending price, continuing?
Well, I feel oil prices would, even if oil prices fall, it's still going to stay above $70. Bear in mind that the markets have already anticipated this. Bear in mind, we're not even talking about Iran's oil yet because the negotiations have been put on hold till mid-August. So the markets have factored this in. So we might not see it's a $78 or $80 price benchmark right now, but we still see oil prices trading above 70. And if more countries get vaccinated or get their people vaccinated and demand picks up, we would see a balance in the oil market.
That's also a major concern now with the Delta variant. I mean, even here in Nigeria.
Yes, exactly.
It's becoming a major threat. And even though UK, they still want to go ahead with that July 19th, but they have a lot of knocks from Ireland and some other neighboring countries. So is this not going to affect the price, even though you have UAE supplying more now?
Yes, so it's a major threat because if more countries get this variant and they're forced to impose lockdowns, then obviously demand will be affected. And once demand falls, prices too would fall. And if you're having low demand and you're increasing supply at the same time, the pressure on oil price would be, be more significant.
But do you think countries will adopt lockdown anymore? Because I hear a lot of people say we have to learn to live with COVID. People should take responsibility.
Can we afford another lockdown?
Yes, and the cost of lockdowns, I mean, global economies have not recovered. We heard Dr. Kunjewala talk about trade and all that. Economies have not recovered from the lockdowns we have had. Do you see countries going for another set of lockdown?
Well, for a country like Nigeria now, we obviously can't afford another lockdown. That's why we have to have that social responsibility. That's why everyone needs to get vaccinated. That's why everyone needs to
If the vaccine is available.
Available.
Because
That's
that's also
another
a problem in
story.
Nigeria.
Yes, but I also heard that we're going to get about 3 million doses of the Pfizer
By the end
vaccine.
of August.
Yes. So
I
we
mean,
might say a mix and match between the AstraZeneca and the Pfizer. But then
Yes.
still, because you even know that you can't afford to have another lockdown, so what measures are you putting in place to prevent or stall this spread? So something has to give. If you're not willing to social distance or wear masks or do whatever or get vaccinated, then be prepared for a lockdown.
For a lockdown.
Really,
Well,
you can't eat your cake and still have it.
yeah. Anyway, let's look at, we're expecting the inflation figures for June today. And,
Yes.
you know, FDC is projecting 18.1%, while AfriInvest forecasts 17.7%. Yours is higher. So what do you think is going to happen?
Well, one of the reasons or some reasons why we are projecting a reversal in the downward trend, which we saw in April and May, is because, one, we are seeing new impetus for price momentum. So by that, I mean that, for instance, look at energy prices. They're on the increase. Take, for instance, diesel, which is the fuel commonly used for logistics and distribution. The price of diesel is trading or is selling around 300 naira per litre. We know that food prices are higher right now. Then also the exchange rate impact, the currency pass-through effect. We know that in May, the CBN adopted the NAFEX as its official rate. So that effective impact will be felt, if at all, in June and in July. So definitely that is also another factor that we're looking at, and we're using that as one of the reasons for why we're experiencing this increase in inflation. And also we expect that these effects are beginning to wane and are beginning to fade off. So definitely we expect to see that also play into the market. And if this projection is accurate when the numbers are released and what we're projecting comes to pass, the market isn't going to be surprised, because we all know what is happening in reality. We know that prices are higher. We know that even if you look at the FX commodity index, as at last week, the index was up about 3%. Ginger prices are up, soybean, cashew nut, and that's wholesale prices. So right now we're seeing that both wholesale and retail prices are moving in the same direction. So definitely, if this happens, if inflation increases, MPC, the Monetary Policy Committee of the CBN, is meeting in 2 weeks. Yeah. We don't expect that increase to have that much of an impact on their decision, because it's just 1 month's increase, and that's not enough to make a judgment call. So we don't think that it would
What if it doesn't increase? I mean, we've been surprised twice now.
We've been surprised twice, and the markets were actually surprised that at that downward movement. And what we could attribute that decline to be, one, because of the base year, because we know that every 5 years you are supposed to reweight or reconstitute your consumer price basket. The last time Nigeria had a reconstitution of its price basket was in 2009 or in 2021. So definitely there are some flaws in the measurement process. And also we know that this time last year, we were in the peak of the lockdown. So carrying out a price survey would have been a bit difficult. So again, it brings to question how the survey, how the data points were collated. So definitely, these are some of the things that we are looking at. Okay, maybe that's why we saw a price decline. And if you look at what is happening in reality, these factors are in support of a price increase. But more importantly, what should we expect? Because these are historical figures. We're entering the harvest season soon. So definitely harvest season, increase in supply, that should moderate price. We also have the fact that consumer demand is still low. Purchasing power is really low at this moment. So the demand for these goods are not really there. So these are some of the factors that would moderate prices. So
we did have US and the UK.
Exactly,
2.5 and about 5.4%.
These countries, record level.
How would this, affect frontier economies like Nigeria?
So it just shows that globally the price pressures are still there. Both global economies, emerging markets too, are experiencing price pressure. So it's not like, okay, it's just one country that is experiencing this. And for global economies, if they continue to record higher prices, it just means that the timetable or the timing for an interest rate hike might be brought forward much earlier than expected. We know that as at the last US Fed meeting sometime in June, the US Fed had brought forward its date for an interest rate hike to about 2023. And now its inflation rate is at 5.4%. If it continues to increase, we might see them coming up with an earlier date. And what that means for emerging markets like Nigeria, we have a lot of external debt. And if the interest rate increases, the dollar strengthens in response, meaning that servicing your external debt becomes more expensive. So that is the catch or the issue for emerging markets.
For on the consumer side now,
Yes.
whether the inflation goes up or it goes down, the figures, does it affect Nigerian consumer behavior? Does it affect?
Really?
Do we see any change? Do we see any impact? Or people just like, oh, it's one of those stories that they bring on the news and they move on with their own lives?
I think right now the average Nigerian is feeling the pinch. Because whether the numbers go up or down, again, even if the numbers decline, maybe it's declining at a slower pace, but if you still go out, the price of a basket of tomatoes is still trading about 60,000 naira. So the
price of bread has increased. Yes. The price of cereals, milk
is about 17,000 naira. So what you see the average Nigerian do is that they begin to look for cheaper alternatives, if that's possible, because some of these substitutes also are experiencing an increase in price because the cost of raw materials have increased. Yes. And also you might find out that they begin to reallocate resources. So instead of spending so much on transportation, maybe I start to carpool. Instead of going to the office, I start to make use of virtual or video conferencing. You also pay for data. So you are going to see a reallocation of resources, definitely. Spending less on luxury and more on essentials.
Okay, but what can emerging economies do, at a time like this where you have the US and UK figures at record highs? What can we do to...
Record highs, but not close to Nigeria.
Well, not close to Nigeria, but, what can, emerging economies actually do at this point?
Well, first of all, you have to understand the features of your country. Because take, for instance, Ghana. Ghana has been recording a steady decline in its inflation rate. So what is Ghana doing differently than Nigeria? So every country has its unique peculiarities. So some of them have been successful with their stimulus packages, and now, because they've been able to stimulate growth to an extent, they can now start to increase interest rates. And some of these countries, for instance, Ghana, Kenya, even South Africa, they have positive real returns to investment, meaning that their interest rates are higher than the inflation level. So even if they want to still keep or maintain an accommodative stance, or even tighten for that, they have enough headroom to make whatever adjustments to the monetary policy. But Nigeria, for the past at least 2 years, we've been recording negative returns on investment because our MPR, our monetary policy rate, is at 11.5%. We are talking about inflation rates currently at 17.93%. Probably to increase to 18%. So definitely, we don't have as much options as some of these countries that have positive interest rate return.
Okay, just before we go to the commodities market, I mean, there was the news that the federal government will sell and concession 38 state-owned assets.
Yes.
Yeah, and the plan is just to increase export earnings from Calabar, Kano to about... Could you tell us what that is?
So basically what the federal government is doing is that it wants to either sell or concession some of its idle assets, basically just to boost its revenue. And we know that since Nigeria received most of its revenue from oil earnings, and we know that in the first 5 months of this year, oil proceeds are falling by about 50%. So again, it speaks to that reduction in your dependence on oil proceeds. So the government is looking for other sources, such as selling its assets. So if you sell your assets, you reduce your deficit financing needs, it creates more funds for you to even spend on critical projects. If you privatize some of these assets, you're also going to attract the much-needed capital that you require to invest in this project. So that's what the government is doing.
When we talk about concessioning, privatization, we've seen issues with these contracts, in the past.
Yes.
So we say, is this not just a quick fix, a temporal fix that would have consequences? Or are these not assets that the government is supposed to maintain, for nation building? Or you understand?
Yes,
should this be the option?
So, first of all, I know that, yes, or we know that Nigeria has that issue of corruption, Nigeria has that issue of bureaucracy, and a lot of countries also have that. So obviously it's a threat and a risk to the process. Like, would the sale of these assets be done effectively? Would there be transparency and what? That definitely is an issue, but that shouldn't stop us from having several options in terms of building our revenue base. So one of these options is sale of assets. You have your oil revenue, you have your non-oil revenue. So you have different portfolios so that at least if you're experiencing some shock, for instance, in oil revenue, can you fall back on your cocoa export earnings, or can you fall back on your sale of assets? So it's not just a one-size-fits-all. You have different options. So it's, like I said, again, it doesn't take away the point of transparency. There has to be transparency in the process. And if there's transparency, obviously you would attract more investors and you would be able to generate as much capital as needed.
All right, let's look at the agricultural commodity prices. See, wheat, corn is up, sugar is up too, and cocoa is down. What's driving sentiment there?
Yeah, so for the global commodity market now, if you look at our key exports and imports, as in if you look at that picture, everything is red. And for instance, now wheat, we know that we have weather conditions affecting wheat in growing regions in the US and Russia. And definitely these commodity prices are increasing, global commodity prices are increasing because we're an import-dependent country. And if you also add the exchange rate impact, so definitely to feed into cost of raw materials, and to feed into our local commodity prices. So it's right now it's negative for Nigeria. And even our export cocoa, the price of export is less than $2,500 per metric ton. But the good news is that at least on a production level, we are beginning to record some increase in our cocoa output level. So that should offset the price of cocoa globally.
And we hope we'll see more increase, especially with cocoa. I'm really interested because, you know, it's a global raw material for a whole lot of things.
For a lot of things, chocolate, cocoa butter, and all that.
Exactly.
Yes.
So I just hope we will explore the potentials inherent in that. Well, thank you so much, Damilola.
Thank you for having me.
You on the show.
Thank you.
Thank you.
So enjoy the rest of your day.
And you too. Thank you.
All right. So we'll take a break now. After the break, the Central Bank of Nigeria is set to begin the implementation of uniform standards on transfer pricing. How does that affect you? Balaon Logoro, Senior Research Analyst with Quadra Securities, will tell us. That's after the break. Stay with us. It's Business Morning on Channels Television.